Hello everyone, my name is Vijay Tiwari. My student ID is VNG2007. As it is for my assignment work, I am going to present a video for my assignment task. And in this video presentation, I am going to explain the key finding of my work. The company I have selected for my project is Orbital Corporation Limited. The corporation is listed on the Australian Security Exchange. I have collected the latest annual report of Orbital Corporation Limited for the last 2 financial years. I have studied the financial statements such as balance sheet, income statement, cash flow statement, and so on. The assignment gives a clear understanding on corporate accounting for income tax. Beginning of the report gives the brief explanation of the basic ideas of accounting in the treatment of taxes. Following concepts would be detailed analysis and assessment of the reporting of the income tax in the income sheet, cash flow statements, and the balance sheet of Orbital Corporation for the financial year 2019 and 2018. First of all, I am going to introduce the company. The Orbital Corporation Limited is working in the automobile sector for 30 years. It designs the engine and propulsion system. Founder is Ralph Sarich, and no doubt listed on the Australian Security Exchange since 1989. The company develops the alternative fuel system that improves the fuel economy of the vehicle and helps to reduce gas emission. The present study of financial report is for how the organization evaluates and reports income tax. Because of the rules difference in financial accounting and rules of tax accounting while preparing the statements and calculating the tax, the income tax accounting in the financial statements is complicated. We can say that the financial statements of Orbital Corporations are presented in the compliance with the Corporation Act 2011, Australian Accounting Standards, and authorities under Australian Accounting Standards Board. The statements are also in compliance with the International Financial Reporting Standards. First of all, some definition of different concepts. Accounting profit, the profit which is calculated on the basis of the applicable accounting framework and the accounting policies of the company. It is recorded in the financial statements for the specific accounting period. Similarly, taxable profit, the total profit or loss for the organization for the given accounting. It includes the investment income of the company, the unearned income, rental income, business income, and capital gains. Temporary difference is the result of inconsistency in the financial accounting rules and rules applicable to tax accounting. Moreover, definitions are presented in written assignments. Now I am discussing about financial report. According to the latest financial report for the financial year 2019, published by the Orbital Corporation, total income tax benefit is $37,000, whereas the income tax expense is $2,000. As an operating entity in Australia, the applicable statutory income tax rate for the year 2018 was 27.5%. Likewise, the deferral tax assets reported by Orbital Corporations Limited were 5,505,000 Australian dollars. And the value of deferred tax assets for the financial year 2018 and for the financial year 2019 were 5,542,000. The organization has provided the complete explanation of the deferred tax balances of the company and the net deferred tax value calculated. Similarly, the organization is permitted to offset the deferred tax balances and settle all the current tax assets and liabilities on the net basis. In the consolidated statement of financial position, the company hasn't conveyed any current tax assets. Orbital Corporation doesn't have to report income tax payable because it has reported a loss in the financial year 2019. The income tax benefit for the company is recorded to be 37,000 Australian dollars. Although the organization has not paid the income tax for the financial year 2019. The reason is deferred income tax or the previous liability of the organization that was recorded on its balance sheet. According to the report of Orbital Corporation, it has not recognized deferred tax assets worth 61,691,000 because there are unused tax losses. These unused tax losses can be the source of temporary differences for the company, but there is no any sign of permanent difference in the expense that has been indicated on the financial statements and the tax calculated according to the income tax returns for the company. Orbital Corporation is according to the accounting standard in treatment of tax and the reporting of the income tax benefit, the deferred tax asset, and the deferred tax liabilities. The organization treats everything under the rules and regulation applied to it, whereas the confusion lies in treatment of tax because it didn't include the accounting profit for the company. Income tax accounting by the Orbital Corporation is complex. It can be difficult to understand the book income and taxable income of the company and the reason behind them. In this study, I obtained the understanding of the deferred tax assets, the liabilities, and the reason behind them. In conclusion, the research on the annual report of Orbital Corporation was done to find out how the organization evaluates and reports income tax, and because of the differences in the rules of financial accounting followed for preparing the statements of the company and the rules of tax accounting followed for calculating the tax that the organization need to pay to the government, the income tax accounting in the financial statements is complex. The financial statements of Orbital Corporations are designed in compliance with the Corporation Act 2011, the Australian accounting standards, and under the regulations of the Australian Accounting Standards Board. Thank you.